The Western sanctions imposed on Russia over the standoff with Ukraine have halted economic growth, and that's according to a recent report by the IMF. The International Monetary Fund says the sanctions have had a, quote, chilling effect on investment, and that money is leaving Russia, and estimates that capital outflows from Russia could reach $100 billion this year. Now, outrage over the drowned flight MH17 is threatening to isolate Russia even further. So where do we stand? Well, in March, the first round of US and EU sanctions included asset freezes and travel bans on individuals tied to Crimea's breakaway from Ukraine. Then in April and May, more Western sanctions against Russia as it ramped up military activity on the Ukrainian border while clashes erupted. And this month, the US unleashed new punitive measures targeting Russian banks and energy and defense firms. Western leaders say they're now prepared for more sanctions unless the fighting in Ukraine ends. And joining us for more on this is Charles Ortel, Managing Director of Newport Value Partners. Charles, good to have you on the show.
Thanks for having me on, Michelle.
So, Charles, President Obama imposed this latest round of sanctions before the incident with the Malaysian air crash, which may or may not now implicate Russia or Russian-supplied missiles. Do you think that that will have an immediate impact on the severity of these current sanctions, or perhaps another round that will follow through very soon?
Well, I would guess from the body language and from what we know so far that President Obama and the Americans and perhaps the Western European allies are eager to continue to apply pressure to Russia. But so far, in this case, while it's true there's been some impact, the sanctions really are not definitive. I mean, they haven't. We all have to admit the one thing that hasn't been talked about yet is the fact that Russia controls Crimea.
The sanctions have not been that impactful. The IMF says they have taken some toll. We have seen some toll taken on the stock market, on the ruble, especially with the announcement of this latest round.
Right.
And these ones are more broader hitting. The previous round was more targeted at individuals. How are these new punitive measures going to make a difference compared to the previous round?
Yeah, these are much more severe in that it's a five-pronged plan. So the first point is one you just mentioned in the intro, that going after energy, going after bank firms. We Americans cannot invest in debt and equity securities, new debt and equity securities of those firms. Then they targeted technology, state-owned technology firms. We can't do business with 8 of them. And then there are certain breakaway regions. We can't deal with them. We can't deal with part of the Crimea. And there are, I think, 4 or 5 politicians who are now on our bad list.
But how dependent is Russia on the U.S. for this? I mean, many have argued that until China gets involved, and if China continues with the business as usual attitude towards Russia, well, then quite frankly, Russia can just weather the storm and move on.
You're absolutely correct. I mean, the big points happened earlier this year when China and Russia agreed that large energy deals, so the future of Russia's energy sales in terms of quantity and value are probably to China, maybe to India. And the West is really, Western European buyers are in decline. So on the big picture, there's a gigantic demand out there in China. There's also a gigantic demand for infrastructure, which the Europeans want to supply. So I think on the balance of economic big picture items, Russia's actually in a much stronger position than you might think.
And in the meantime, President Putin warning Obama and warning the U.S. that these sanctions will have a boomerang effect on the U.S. and that they will have very dire consequences. What could these consequences look like?
Well, you know, Vladimir Putin, people forget, he gave a really good speech January 27th, 2009 at Davos, when he talked about these structural problems. The world needs a currency for savers. And Putin has been arguing that he's going to create such a currency. He just signed that $100 billion deal with China, with India, with Brazil, and with South Africa. And I think that's a first step towards creating a rival institution to the Federal Reserve. That would really hurt the United States. If such a big bank got together that didn't have legacy liabilities, that could sort of outmuscle the Federal Reserve, that would be very dangerous for the U.S.
In terms of a near consequence, what kind of retaliation do you see from the Russian side?
I think that's one. I think they could do tit-for-tat retaliation against our politicians. They are pushing us all over the place. I mean, Syria, with Iran and other...
Should this investigation reveal that these were indeed Russian-supplied missiles and that Russian forces implicitly or explicitly were somehow involved in this, what do you think we can see happening?
I think we'll see a lot of big talk, fancy talk, and little action. I mean, we have to remember that there are tens of thousands of Russian troops right near Ukraine. We don't have that many troops right near the Ukraine. We're not exactly going to get in a shooting war with Russia. Europe doesn't have the stomach to really replace the United States military spending. If we snap back into a Cold War II, the amount of additional spending the United States would have to think about to get to pre-1991 levels is so massive. We don't have that stomach.
And you think Russia has basically understood this, especially, as you said earlier, with the way the U.S. has been responding to Iran, that it's just dismissing this as idle threats?
Well, the ironic thing here is that Russia and indeed China, elements in China, are far more free enterprise capitalist than elements within Western Europe and the United States. And the experiment with high-cost government, redistribution, a lot of debt, not really helping the population with young people coming along, it hasn't worked well in Japan, Western Europe, and the United States. And Russia sees this.
Charles, what do you think the reaction from the global markets is going to be like as this unravels?
I think this, unfortunately, is reminiscent of the 1913 period, of the run-up to World War I, when things can spiral out of control. There are a lot of eyes watching the situation, watching the fact that this isn't the first time the United States has drawn lines in the sand and then not followed through. There are a lot of flashpoints that could erupt, and once they start erupting, it's very difficult to put the genie back in the bottle. So I think it's dangerous. I think valuations are elevated. I think interest rates have been suppressed for too long, and this is a time to be extraordinarily cautious.
Okay, certainly something we're watching closely. Thank you so much, Charles Ortel, Managing Director of Newport Value Partners. And these geopolitical tensions have been already taking a toll on world markets. They did have a mixed end to the week as investors are now pondering the implications of the Malaysia Airlines disaster. After dropping on Thursday, Wall Street did rebound strongly today. The Nasdaq up 1.5%, the S&P 500 gaining 1%. But in Russia, where investors have withdrawn billions over the crisis with Ukraine, the MICEX index finished more than 1% in the red. And it was a similar picture for the Nikkei in Tokyo. European markets, however, faring slightly better today. The London FTSE gained nearly 2%. Now, Malaysia Airlines, the stock itself, taking a big hit, down another 11% today. Now, keep in mind, the company has already lost a quarter of its market value this year following that disappearance of Flight 370 in March. And questions are being asked about whether the carrier at all can survive now. All right, we're taking a quick break. Coming up on the show, though, how a little canine wash and go is helping to wag the tail of South Africa's consumer economy.